G'day traders, here's our weekly review of some speculative stocks and types of stocks you probably shouldn't be investing in, just a random sample. So here we're going to be talking about these 5 stocks, IOOF, these are all Australian stocks, Woodside Petroleum, AMP, Flight Centre and Boral. A couple of exceptions there were possibly okay to trade. Woodside Petroleum is probably not a bad stock, although Boral is not paying a dividend at the moment, so you want to look out for making sure stocks that are paying dividends you get into, so you're getting some return on your investment if and when the market turns against you. This table just also shows the dividend yields as well as when the ex-dividends were paid or due to be paid, what the profitability is over the 18-month period. Again, we're looking at a rolling 18-month approximately on 15-minute charts. So what the profitability was to buy and sell those stocks according to our strategy, or what the profitability or drawdown is to buy and hold, that is not to trade that stock. And then the maximum drawdown that was hit or reached for each of these stocks over the 18-month period. So let's look at IOOF first as an example. So IOOF, again, not enough data has come through, but at the moment it showed up early February. We entered the trade and we're up $44 for the buy and sell strategy, and buy and hold we're up $60 so far. So probably not a good example. These ones both closed out with a small profit each. Next we'll look at Woodside Petroleum. So again, over an 18-month period on a 15-minute time frame, you can see there the buy and hold strategy, we're down about $550 to buy and hold, and we're up about $4,500 on the buy and sell strategy which we're following. You can see there also the market went sideways and downwards after the COVID period. We accumulated some stocks there. We went to maximum drawdown there. We reached about 5,300 off the drawdown, but when the market recovered we closed out at a profit, so we're currently up about $4,500 with a couple of trades happening after the big drawdown happened. So not a bad little return for Woodside Petroleum. It's our best performer. AMP, again paying 0 dividend. Let's look at AMP. So again, the buy and hold strategy is still in the red, whereas the buy and sell strategy has made a few returns, a few closed trades. Even after COVID, we're returning about $1,171. So not a bad little return. And the drawdown we reached on that one for AMP was $1,164, but we returned that. That would have been the biggest drawdown, would have been probably that period there from that high to that low. But we returned the profits, as I said, to $1,171 there. Flight Centre, not a good stock to go into when no one's travelling, but let's look at how that's performed. So again, very limited data, but we entered the trade back here late January, so not really an 18 months, just a couple of months of data available on the chart, and both of them were down without closing out at the moment. So this one is still down on the buy and hold, and even the buy and sell we haven't closed out at all, so just hold that and see. So that's going sideways at the moment. Lastly, Boral, not paying a dividend but returning some results. So let's look at Boral. So buy and hold, it's just broken our profit of about $35 in the positive. And the buy and sell strategy has returned a few trades, and we're currently up about just over $2,000 on trading on Boral, with a maximum drawdown we reached of about $1,400. The drawdown would have happened probably between that period there, between that high and that low of profitability during the COVID peak. That's our speculative trade review, and that was the result. So we're up about $7,800 of those trades roughly over an 18-month period. All right, I will speak to you again next week. Thanks for watching.